Hey guys, how's it going? Today is 16th of July. It's been a long while, guys. I know. Just want to show you guys something quick. Here we have New Zealand dollar to the Japanese yen, and I've been learning strategy from Inner Circle Trader. Basically, what we're looking for is a weekly reversal. So I've been backtesting for quite a while now, and this is what I'll be doing this week. Um, as you can see, we're coming down in a bearish market. Um, here in this vertical line, we can mark up the opening price, right, which is the fair value. So now what we're looking for is move to the upside first, and then past the opening price, right? And then in the New York session of the Tuesday, or the London session of the Wednesday, we want to see a reversal, right? So what we see here is a move upside from the opening price and a move downside past the opening price. Now that's exactly what we want to see, going down. Then, as you can see, Tuesday during the London session, it creates resistance here, right? This resistance can be seen as a future support, so which is what we see, which is very good actually. So during the New York session of Wednesday, we see a break upside and a retest. So this is exactly where we take our position. You'll set your stop 20 to 50 pips. Here it's 50 pips, and then you really only need 100 pips, right? So pretty much this strategy can be used. I would recommend it for swing trading, as you would say, not necessarily for a short-term trader. This week I'll be swinging on New Zealand dollar against the JPY, and then my main currency will be gold to the dollar. So here we have a clean risk reward ratio of 200 pips. It's pretty much guaranteed on every move here, which is why I like it. There's a lot of volatility during the Tokyo session due to the time zone of New Zealand dollar. Time zone of New Zealand and Japan. Their markets are open at this time. Obviously, my time zone is different, but this will be the time that I will actually have to look at the market when I come back from school or whatever, right? So which is why this will be easy for me to swing trade, and then for gold, obviously I'll trade it earlier in the day as a scalp gold. And then I'll show you another one, guys. So in this time we mark up the Sunday, right, and we mark up the opening price, which is right here, right? So what we see is that there is a slight move downward, then it breaks out, right? So here you can see higher low, higher high right here, higher low, higher high, higher low, higher high, higher low, higher high, and then it breaks the previous low, right, which indicates it's going to go to the downside. So we mark up our zone here at the previous low, and as a resistance, obviously price comes back to retest. Our stop loss is 36 pips, as I said last time, 20 to 50 pips stop, and then 100 pip take profit. Very easy, very easy. New Zealand to Japanese yen, I like it because it's not as volatile as gold or other currency pair. Well, I wouldn't say other currency pairs, but it moves very smoothly, I would say. It's very simple. As you can see, I could even add a trend line here. Very simple. Very very simple trend line. You know, it's very clear what is going on in price here. I usually have a challenge seeing that in other currency pairs like Euro USD, GBP USD. Those would outsell, more volatile. It's more difficult to get a better entry there, but here very little drawdown when you enter price properly. And I'd say if you're a beginner sort of like me, this would be a good one for you as well. Another example, let me show you let me show you a different example. Okay, so let me show you a different one. Okay, here's a nice one that would be a little bit confusing. So here we have our weekly open. We mark up price moves upwards, right, and it goes down. From then on, it uses the opening price as resistance, and we see a move downwards. So pretty much you can see we're coming in from a bullish market. So what we look for from a bullish market, we look for price to retrace downwards and for a bullish continuation, right? So we see that right here. Opening price is used as resistance, and we don't enter because we're looking for buys since it is a bullish market. Price comes down here, right, and it doesn't break out, but instead it uses the support, right? And what validates the support is that it rejects multiple times. This is when it was created, rejected a second time here, and the third time is our entry, right? Another 100 pip take profit, 20 pip stop loss, easy money. All right, we see another one here. Opening price, so it's getting very simple now. It moved upwards and it broke to the downside. All right, coming in from a bullish market. So we want to see when it goes to the downside, we want to see a reversal upwards. All right, so it does the same thing here. It starts moving downwards and starts creating a support. Right, our support is validated when it was created and rejected multiple times. Entry point at the top of it, 27 pip stop loss, 100 pip take profit. Very simple, guys. I'm about to make a second video on my progress on gold, and that will be up shortly after this one. And tomorrow I'll update you guys on how I've been going. Thanks for watching, guys.